What's going on? My name is Jackson Summers, and in this video, I'm going to be talking about how to make money with stocks during a bear market and how to make money during a stock market crash, right? Kind of like the one we're in right now. Now, I wouldn't say we are fully in a recession at the moment, more just of a stock market crash. If you want to learn more about how to trade and how to invest during times like these, I would recommend keep watching, as I'm going to get into how I pick stocks and what I'm doing with my money right now during the stock market crash of 2020. So before anything, I would really appreciate if you could smash the like button on this video, as it really helps me out with the YouTube algorithm. Also, subscribe to the channel if you do enjoy, and turn on those post notifications so you never miss an upload. Okay, let's get right into this. Making money during a stock market crash, is it really possible? And yes, it absolutely is. It's actually when most of the fortunes are made, right? And that sounds strange, because you would think that if it's all crashing, how is anyone making money since everything's going down? Well, when these things are going down, it's essentially like a sale, right? And they're great times to buy. It's like when something goes on sale in the grocery store and you buy in bulk because you know it might not be on sale for a while. Same thing with the stocks, right? People know that this only comes every decade, if that, right? So when it does come, you want to be prepared, and you want to buy companies that are going to hopefully go up in value once the market starts becoming more bullish, right? And essentially, the people that know how to invest during these times know that you have to buy when everyone is selling. That's when you're going to make the true profits. Now, some important facts about the current market. So essentially, we were in a bull market for 11 straight years from March 2009, right? Right after we had the crash of 2008, 2009, we then went into a bull market in 2009, and it's been like that for 11 years, which has been awesome, right? On average, bear markets last about 22 months, right? The current bear market began on March 11th, 2020, which was just over a month ago, and that was when the Dow fell a total of 20.3% from its February 12th high. So a signal of a bear market is when the Dow falls more than 20%. And it did that just in a few days back in March, right? Since then, it has bounced back a bit, as you can see from these charts. Currently, we're actually only down 18% from the February 12th high, because the Dow did bounce back quite a bit. However, it went as low as 38%. It dropped another 18% once it hit that 20% point, which was insane. And we really just saw the sky falling. But if you know how to invest and you know how to trade, you saw opportunity. Now, this is a chart of the 2008 to 2009 crash, right? And it was very significant. The Dow actually fell a total of 54% in a very short period of time. And to get back up to its previous high that it held here, it took about 3 to 4 years, right? And then it started growing significantly, and we obviously saw the rewards of that in 2020 when we reached a market high, but then obviously we did see a fallout in the last month or so. Now, this was the 2000 and 2001 bear market. It wasn't as bad as the 2008 financial crisis and recession, but it did go down a total of about 38%, and then it bounced back fairly quickly. In the next 3 or 4 years, it was right back up to its previous high. So is that what is going to happen this time with the Dow Jones? We don't know. We do know that it did dip already to 38%, bounce back. Now we're sitting at only 18% down from the February 12th high. So it's a lot less, but we could obviously see a lot more downside depending on what's going to happen with what's going on in the media right now, as you probably all know, but I can't really talk about on this channel, because that has a major impact on the market and is pretty much what drove the market to where it is at right now. What's the next step, right? What is the next step? You saw the charts, you saw the 2009 market crash, you saw the 2001 market crash, and you saw what we're currently in. But what would I do next? Well, step one, if you are an investor, right, you want to invest for the future, you want to grow your retirement savings, then you need to buy into profitable businesses that you fully understand and believe in for the coming future, right? You need to completely understand its goal, its vision, and what they're selling how they're going to make money, because if you don't, you're probably never going to see any success with any of the companies you invest in, unless you get lucky. Right now, I would always say look for companies that have low to moderate debt to equity ratios, right? Because you don't want companies with large amounts of debt, because that's never good for the future, and it probably will just continue to grow and make it harder to make a profit, which will obviously not be good for the stock share price. Also, make sure they're high-paying dividends, because dividends lead to higher compounding interest, which means more passive income for you, right? Also, I like to make sure that the companies I invest in, their gross profit margins are increasing and not decreasing. That way, I know in the future, it's going to be a successful company based off its current trends of its gross profit margins, right? If it's constantly increasing at a yearly or monthly rate, then that's a good sign for the future and probably a good investment, depending on if you understand the business, right? However, all of these things really don't matter, to be honest, if you're just swing or day trading, especially in a market like we are in right now. It's very volatile. One day it's However, all of these tips I just talked about don't really matter if you're just swing or day trading, in my opinion, because however, in my opinion, when I'm day trading or swing trading, I don't use any. However, in my opinion, if I'm just swing, in my opinion, if I'm just trading. However, in my opinion, if I'm just day trading or swing trading, none of these things matter, because I look at solely technical analysis and I don't even touch fundamentals, since I'm essentially taking advantage of the volatility that we're having in the market right now to make quick gains, right? And then sell it. That doesn't necessarily mean I believe in the company. I just want to use it because I see an opportunity with technical analysis that it's going to bounce up in the day. However, if you're just swing or day trading, I like to use solely technical analysis, right? I don't like to look at the fundamentals of a company, just because I'm only going to be holding it for a very short period of time. So I want to take advantage of the volatility that the current market is giving us, right? One day a stock is bouncing up 15%, 20%, but then the next day it's bouncing down 10%, 15%. So it's a very risky game to play. But if you know how to do technical analysis, right, it's best to take advantage of that skill when we're in volatile markets. That way you have the best chance of making the quickest profits and gains you can. However, it also means that the higher the risk is, right? Because nobody knows what's going to happen with this current crash we're having, if it's going to recover in a month or two, or are we going to go into recession, right? Which could last another year or 2 years or even longer, depending on what's going to happen with the current crisis that's going on in the media, right? This video is mainly for investors, as I believe that's the true way to growing your wealth for the future, since nobody can predict the market 100% accurately, no matter how good you are at technical analysis, right? However, there is no secret that the economy is increasing decade after decade, which obviously helps stocks and companies grow as well. So if you're investing in the future, you have a much better chance of actually being successful with those investments, right? Especially if the market and the economy continues to grow at the rate it was for the last 20 years, right? So that's why I think investing is best, especially during the times like these. But if you know how to trade using technical indicators and analysis and patterns, then you can do that, right? That's up to you. There's obviously a lot more risk that goes into that, but there's also a lot of benefit too. So yeah, it's truly up to you. Now, step 2 is having a plan and being patient, which is very, very important, right? It's impossible to time the markets perfectly every time. Nobody can do it. And not even machines or robots or computers can do it. So pretty much it's necessary to use something that's called dollar cost averaging, which means you're buying and selling into positions at fixed rates and set amounts of shares on a routine basis, which pretty much avoids any chance of you buying at a high or selling at a low, right? Which nobody wants to do. Those are the two worst things you can do when buying and selling stocks. And that's what's going to lose you money in the end. Always make sure to reinvest your dividends, as this truly helps make dollar cost averaging even more effective, since it essentially gives you a better average price that you bought at, right? So that's why dollar cost averaging is really important, because it essentially averages your buy-in price, so you're not taking as much of a loss, right? Dollar cost averaging is used by millions of people, and that's because it's proven, right? The results are there. You don't want to invest into the stock market once and just leave it for 25 or 50 years. You want to be investing on a monthly or even weekly basis if you can. That way you're going to get the best average share price of whatever you're buying, right? And it's going to give you the best chance at profiting off a growing stock market or even economy, right? Additionally, I would recommend maxing out your 401k contributions from now and for the next couple of years or so, because this is going to be the time when stocks are the cheapest, and you want that compound interest for the future, and you want the lowest price you can get, obviously, which is going to make a huge difference in the next 20 or 30 years. Whenever you take out your 401k, there's probably going to be a much more significant amount of money in there than if you waited another 5 or 10 years when the market has already recovered and started doing amazing again, right? So that's step 2. Step 3 is staying calm, which is perhaps one of the most important parts of investing and trading, right? Market crashes are part of the game, right? And they normally come every 10 to 15 years, depending on what's going on in the economy, news, media, and sometimes other markets can affect the stock market, right? Like the real estate market. But you have to understand that the market always bounces back eventually. There's never been a time in history when the Dow Jones has not bounced back after a market crash. And that just shows and hopefully gives some of you hope, because I know it can be very difficult, especially if you're retiring in the next couple of years, and you're just watching your money fall day after day. And it's easy for me to say that's a lot younger. Oh, it's great. It's on sale, right? Yes, it's great for people that want to get in, but for people that want to get out, it's not so good. And I understand this, but you need to stay calm and not get nervous about a stock continuing to fall, right? Just stick to the plans you have, and think of it as essentially a Black Friday sale. And if you can, start acquiring more of that stock, because this is probably one of the best times to do it. And there's a good chance that in the next 3 to 5 years, the market will recover and grow significantly. We've seen that pretty much in every case in the past 30 years, that when the market has fallen, it has started growing back to where it was in the next 3 to 5 years. Sometimes takes a bit longer, closer to 10 years, depending on which crash we're talking about. But in this case, since it's such a news flash media event that could come and go very quickly, I think the market will also react to that news going. So obviously it will start growing at a rapid rate, hopefully very soon, when things start to settle down. As you can see, making money during a stock market crash is very possible, and just depends on which companies you invest in, how much you invest, and how often you invest. Those 3 things are key, right? You want to pick companies that are, again, great companies, that are, again, showing consistent profit margin growth, and that have plans for the future, more products coming out, more innovations. Second, you want to start using dollar cost averaging, so you're getting the best average price you can, while reducing the risk of buying at a high or selling at a low, right? And third, you need to stay calm, as we talked about, right? These markets bounce back eventually, and you need to treat this as a big sale that you can profit off of if you're buying the right stocks and you're investing in the right way. Because truly, we haven't seen a major stock market crash in 11 years, and we're not sure how long this is going to last, if this is actually going to go into a recession like we had in 2008, or is it going to repair itself very quickly and bounce back. Nobody knows. No matter how many articles you read, we're going to just have to wait and see and react accordingly. And the great thing about this is, if you have a plan, it doesn't matter if the market continues to decline for the next 2, 3 years, 4 years, 5 years. As long as you have that plan, you stick to it, you make those consistent investments. The goal is not to find the absolute lowest price and buy it there. The goal is to buy at consistent rates, so you get the best average price. And essentially, that's the least riskiest way, in my opinion, to grow your wealth significantly for the future. Now I want you to take a look at some of these stocks that I have here, and I'm just going to show you what buying during a stock market crash can be like. As you can see, right before the crash on February 12th, we were at $590 a share, which is pretty much the exact point we're at now. It dipped a total of 47%, okay? And if you bought there, from that point, it jumped up 91% in this last, I would say 20 days or so, which is truly amazing and just shows what buying during a stock market crash can be like. Obviously, it could continue going down lower. Nobody knows. But I did just want to show you that because right there, it's up 12% today, which is insane. Now, we have a similar case with Tesla as well. It was at just about $940 a share. It dipped all the way to $350 a share for 60% decline, right? Which is insane in that short period of time. But since then, it's gone up about almost 100%. Yeah, over 100%, which is insane, right? It just shows again how much money can be made off stocks that are great companies, that people know are great companies, and they say, oh my God, look how cheap it is. I'm going to buy. And that just keeps going until eventually people want to sell, and then people keep selling. The cycle continues, right? You just have to know when to buy and how often to buy. That's essentially the goal here. And looking at the Dow Jones, we can see is a similar case, but obviously not as significant as a bounce. But as we can see, it started up here, right? And it went down about 38%, as we talked about. And now it is up 33% in less than a month, okay? If that doesn't show you how much money can be made during a stock market crash, I don't know what can, right? That's just amazing, right? The Dow Jones normally returns an average of like 5 to 8% per year, and it did 30% in a month, right? Obviously, that would be having to buy at the low, but if you averaged in and bought day after day or week after week, you probably would have got still significant gains in this last month. Now, I wanted to show you that just so you truly understand the amount of potential and opportunities the stock market brings, especially when it's in a crash or bear market, right? Just because it's in a bear market does not mean it's going to be continuously going down every day. That's not what happens. It goes down, it bounces back. It goes down, it bounces back. And if you're trading, obviously, you want to be in for when it bounces back. But if you're investing, you want to just be buying as it goes down and be buying as it bounces back, because then you're getting the best average price, right? So that's my opinion on that. So if you enjoyed this video and if you have any questions, just comment them below and I'll respond back to every comment. I really appreciate all the support we've been getting lately. I can't believe how much we're growing, and I truly appreciate each and every one of you. Thank you so much for watching. If you did enjoy, please smash the like button and subscribe to the channel, as it really helps me out with the YouTube algorithm. Also, turn on those post notifications so you never miss an upload. Also, if you could follow my Instagram at JacksonSummers111, as I post awesome motivational content there as well, and you'll be first to know when a new video comes out. If you could, hit the link in the description below to check out my new Success Apparel merchandise shop, where I have all types of awesome designs that are for people that love investing and trading and making money online. So if you want to learn more about that, hit that link and support this channel, as it really helps me out, right? And motivates me to continue making awesome videos like these.